What I will do is just provide an overview of my reading of the state of microfinance. I'm sure most of you here will probably be more grounded than I am. So maybe later in the open forum, hope this will provide a good framework for us to continue to get a better sense. Okay. Joe? Yeah. So I'll just try to cover these. Main messages include one, well, the sector, as you all know, has been growing. So I will just provide some statistics to provide dimensions to that, the nature of that growth. And then I'll just also briefly share, some of you may be familiar with a mixed org, just to give you a sense of where the Philippine MF sector stands relative to other Asian countries, okay, based on voluntary reporting of selected MFIs. And my sense of the basic trend or trends with regards to what's been happening to microfinance, both at the supplier side and then on the borrower-saver side. Okay? And then, again, some observations on multiple borrowing, indebtedness, and portfolio quality. And then last, thoughts about assumptions about impact in relation to the crisis. Yeah. So, part of the challenges is, in the Philippines, there is no single repository of microfinance information. So if you ask, how big is the microfinance sector? You go through several sources. Okay, so here, no attempt at reconciliation. I just hold my strings in terms of data. 3 sources. One, from a recent report by Jerry, the BSP says there are about 203 institutions, about 900,000 borrowers, and about 7 billion in portfolio. All the way down to the National Anti-Poverty Task Force estimate. And this is data gathered from all government financial institutions, including the DSWD. Again, with no attempt at reconciling overlaps. So the estimate there is about 7 million borrowers, pardon the number, and then about this time the data is in terms of releases, so 47 million in releases. So if you have that, assuming it's a half-year loan, then you're still looking at about 25 billion in releases. Okay. So that's the whole range, and maybe a ballpark would be to say maybe there's about actually 3 to 5 million active microfinance clients, maybe at the end of 2010. And that's not to count the dropouts that have fallen by the wayside or have recycled themselves through the years. Okay. Then, just again, a little bit of math based on available data to try to make an estimate of the growth rates based on available data. So again, it ranges from the MCPI data. This is just from the aggregate data of those who submits to the Microfinance Council of the Philippines. Borrower and portfolio outstanding growth from December 01 to 2009 ranges in the 30% or so. From the NAPSI, it's about 25 to 28. PCFC, this only has to do with the People's Credit and Finance Corporation portfolio. So that is more reflective of PCFC's performance rather than the growth of the sector. I recall maybe about 10 or 15 years back, I recall trying to do similar assessments of growth rates, and I remember that they were much higher. They were in the range of about 30-40% compounded annual growth rate. So it seems that as if the sector has in fact sort of tapered its growth rate, but not yet. We're still talking about 20 to 30% growth rates. Yeah. Next. Yeah. Okay. All right. That's fine. Next is just to give you a sense again from PCFC data, and this is just PCFC data. I use the word saturation proxy because again, as a substitute estimate of the total market, the People's Credit and Finance Corporation uses the estimate of the number of poor households in a given region. So note I highlight it's a proxy estimate because we know not all microfinance borrowers are poor, but nevertheless that's the best or closest estimate in terms of market demand versus saturation. And let me just highlight the first bar, represents active clients, and the second bar beside each region is the estimated number of poor households. So note there are about 4 regions where the number of active borrowers is equal to or much more than the estimated number of poor households. And these are in Central Luzon, Calabar Zone, Mimaropa is pretty close. Western Visayas, and then finally NCR. Okay, so main conclusion is that there is some amount of geographical concentration of where the MFIs are. Okay, and that gives you also an extent of the market saturation. Anecdotal evidence, and I'm sure when you go around, you talk to your staff or the clients. We just went through a series of FGDs, and invariably when we asked focus group discussions. Invariably, when we ask the focus group discussion participants, oh, what other MFIs do you know of? First, they'll say, we don't know, but then when you ask them, what about your neighbors? Invariably, at least top of mind, the names of 5 MFIs, at least, will come out in the list. And we're talking about participants from Luzon, Visayas, and Mindanao. Okay, so just to give you a sense of what's happening out there in the market. Next. Next is just a slide. Again, this is just People's Credit and Finance Corporation data. Okay, but again, it gives you a sense. This is the number of microfinance institutions per region. Highest would be close to 45 in Central Luzon. Okay, of course, expectedly lowest would be ARM. Interestingly, NCR doesn't have too many MFIs. But again, let me emphasize, this is MFIs of the People's Credit and Finance Corporation, not the universe. So the universe could possibly be bigger. Okay, next. Okay, now let me just share some benchmarks. Okay, and there's a reason I'm flashing this. Beth has mentioned the whole issue of interest rates as always a vulnerability. And let me just share this. Okay, this again just based on mixed data, 2007 Asian benchmarks. Again, data based on voluntary submissions of Philippine MFIs and other Asian MFIs. And note, those are median values. Okay, middle values, which means that there will be MFIs with data lower or higher. This is just a middle value. And where does the Philippines stand? Well, just tells you that the gross yield, the yield on gross portfolio, compared to the selected Asian countries, now there's a whole range, but I selected these, we're close to about 43%. Okay, that's a median gross yield. So I guess that is gross interest income plus service charges probably divided by the average loans portfolio. Okay, so pretty high in comparison to the other regions. Okay. Next, the other bar beside that is the operating expense per loan portfolio. Okay, so I guess the difference, you get a rough indication of the spread, right? Percent spread around the gross loan portfolio. Okay, so in that sense, you can see that overall, Philippine microfinance remains to be a fairly profitable proposition. And again, this is quite a change, because I remember about, many years back, when I was doing a research on trying to establish the break-even or viability periods of microfinance branches of a number of selected MFIs. This was perhaps in the 1995, 1998. The break-even period that the numbers were showing at the time was about 5 years for a branch to break even. Okay, so I'm just saying that in a sense there have been changes, innovations, emphasis on viability, etc. And we've come a long way in improving that. In fact, I think now, if you tell an industry practitioner that microfinance doesn't make money, perhaps people will begin to laugh at you. Whereas maybe 20 years ago, microfinance make money? Are you kidding? Okay, so that's the shift, the change in the situation. Here, other indicators: return on assets. Philippines, okay, I think Cambodia is like fairly high, and then but highlight there that it's positive, and then the return on equity next, is close to perhaps about 5%. I guess indicating some amount of leverage. Again, emphasize these are median values. There will be those who are higher and perhaps those who are lower. Main message here is that, still microfinance in the Philippines, at least based on those who are reporting, remains a fairly profitable proposition. And these are, if I may say, reported official numbers. Okay? Meaning that perhaps, there are other numbers not shown. But anyway, go on. Yeah. Okay, just to get a sense, the average loans outstanding balance. So Philippines, slightly less than $200 average loans outstanding, more or less, in 2007. So times 40, it's about 8,000 maybe. Okay, again of those reporting. And then maybe if you multiply it by 2, assuming a a 25-week cycle, we're looking at 16,000. Again, let me note, this is the median value, okay, of those reporting. Okay, next. Portfolio quality seems pretty good, although, not way, but below the 5% supposedly industry benchmarks, and loan loss rates is about 3%. Okay, next. Another indicator is the commercial funding liabilities ratio. I guess the share of commercial funding to total liabilities. So again, Philippines, fairly high, 80%. I guess this is related. No? I don't think you can see this, 10 years ago, maybe 15 years ago. But now with the proven track record and supposed bankability of microfinance, because in fact the situation now is, my sense is maybe much like in other countries. Many funders running after very, very few lenders with the capacity to take on more loans. So in a sense, it is a buyer's market for those taking on wholesale loans. In fact, for People's Credit and Finance Corporation, it has become a part of a challenge in terms of lending wholesale. Okay, next. So, competitive landscape, you know this. Through the 5 or 10 years, we've had quite a number of new entrants, both in the wholesale and the retail. Whereas maybe 10 years ago, the only wholesale institution maybe would have been the People's Credit and Finance Corporation, maybe Land Bank. Now you have commercial banks, both local and foreign, coming into the field. Then you have quite a number of retail players coming in also. Commercial banks have come in, RCBC, BPI, a number of them going into the field of microfinance. There has also been growth, both growth and consolidation. And the nature of the growth has been, I think, accounted for by maybe 3, 4, or 5 major players who have accounted for quite a substantial growth spurt. In fact, I played around with the MCPI figures, the reporting. Just based on the Microfinance Council, the Philippines reported data, 85% of total borrowers of the Microfinance Council members who submitted reports are accounted for by the top 10. And the top 10 also accounted for 75% of total portfolio. So I'm just saying that the industry is such that there are quite a few big players accounting for a significant share and many small players. And that in fact, for some, I think, have either slowed down, the smaller players have either slowed down, stopped. And I know of one MFI which has decided to totally move away from microfinance, scale down, close down, and just focus on small enterprise lending. Okay, so there's also some consolidation going on. And as you all know, all of you are probably in the midst of diversified product offerings ranging from loan products, micro-agri, to micro-insurance, to savings, and also diversifying your market segments, no? Moving up the missing middle ladder, the small enterprise lending, and in some instances also moving down to the smaller borrower segment. And a lot of what's been happening now is a number of you are beginning to dabble in mobile banking, e-banking, ATMs, so a lot of innovations. Pricing, my sense is that through the years, while I'm not an economist, but I think the economists say that if there's more supply, then theoretically, there should be competition and prices should come down. But if I were to ask people in this room when the last time they reviewed their microfinance pricing, I would suspect that price has been one of those that has not moved down. Okay? And initially I thought, well, maybe if you let competition come a little bit more, maybe it will. But more and more I'm leaning towards another issue, which is a realization, at least at my end, a hypothesis, that pricing, any rational businessman would want to touch the price last. Right? And the situation in microfinance is such that the pricing instrument is not very transparent. Okay? When you talk about interest rates, many ways of describing it to a borrower, right? And there is no single reference point. Maybe it's about time that we need to think about bringing about change and more transparency on the pricing side so that the competition can also begin to move in that direction. In some of our discussions with clients across different groups, invariably when asked what their first most important thing they would look for or ask for before they take a loan? Their answer would be interest rates, how much the interest rate will be. But in subsequent probing, when we try to see to what extent they appreciate or are able to differentiate between flat rate and the concept of effective interest rates, okay, we run into serious trouble, okay, in terms of understanding of effective interest rates. So while there is an attempt on the borrower side to try to compare everything, they are just not able to handle dealing with comparing prices given the lack of transparency or current practices. I'm sure you know this also. Generally, when you say interest rates, people are always used to interest rates being quoted on a monthly nominal basis. That's it, 2%, 5%, 10%. And they try to compare on that basis. Okay. And let me just share also that my insight has been that comparing across lender types has been fairly easy actually. Because starting with the informal, they call Bombay, it's very easy. 20% per month, or 20% every 40 days, or 20% every 60 days. Next in line will be the individual lender, somebody in the community, and they'll say it's 10% per month. Then next in line would be pawn shops, it's about 5% per month. So the comparison is quite straightforward, and the margin of error is practically zero, that they would make a mistake in judgment as to who is most expensive. But what's emerging is that when they are asked now to compare against MFIs who have very similar offerings, right? More or less 2% per month, 25 weeks, 24 weeks, with service charge, without service charge, etc., they begin to get confused. And the problem or the challenge is comparing against MFIs. And another interesting hypothesis or observation is that it seems as if among microfinance clients now that they have wider choice among providers. As I said, you go to a community and they will be able to name 4 or 5. While a number of them may not admit to borrowing from several, some of them will admit to having borrowed from an MFI before or know of a neighbor who has 2 loans simultaneously. And so within that, they try to make comparisons across. But then, I'll show later, the differentiation is still not around pricing but on other variables. Okay, next. Okay, this is just a listing of what some of, in our interviews with microfinance clients, what they say are the things that they look for. Okay, very clear, interest rates always rank number 1. But then it's less clear in terms of what happens here. Interestingly, quite a number mentioned benefits. And when probed, they begin to say, well, insurance, mortuary, loan insurance, life insurance, okay, as determining factors as to who they borrow from. That's from one segment of the group. Okay. A whole range, collection methods, benefits, loan processing times, so on and so forth. So this is just to highlight that, well, within MFIs, borrowers are beginning to compare. Okay, but while they say interest rate is number 1, their basis for comparing interest rates has simply been around the nominal rates, and then the amortization amounts that they have to pay, and the rest around all the other factors. Okay. Well, just a reflection. I thought I just tried to do. Because one of the things that's been happening is we're engaged in a research to try to document and see the extent of multiple borrowing in a given community. Okay, but we're still in the data gathering stage. But again, anecdotal evidence, interviews with both clients and some of the MFIs indicate an awareness, I'm sure you know that, of the increasing incidence of multiple borrowing, meaning that one client would have 2, 3, 4 loans. Okay. Note that I use the word multiple borrowing because we are careful not to necessarily conclude that multiple borrowing equal over-indebtedness, though that is one scenario. Okay. Now, to what extent it is related to over-indebtedness is part of the objective of what we will try to establish by linking, see if we can, the incidence of multiple borrowing with perhaps repayment rates or delinquency rates with the data that we have available. No, but I thought, okay, this is just a scenario. If you assume a 10,000 peso loan that's paid in 25 weeks, the weekly amortization of 400, I just did a simple calculation of what is this as a ratio of estimated income, assuming 3 levels of monthly household income. 10,000